Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And I've left my lines on here from last week's report, where you can see that this line showed a quick dip and then a bounce in the market is what I forecasted. And you can see that Monday, a little bit more than a quick dip on the news from Greece, that the banks were shut down, the stock market was shut down. They're still in a heap of trouble, so I don't think that's going to fare very well in the U.S. markets moving forward. So this little bounce that I was expecting could be just that. I'm going to erase these lines right here and redraw those new lines for next week's forecast so that I can show you exactly how to manage risk in this particular market, especially with the volatility. You could see that this low here that's March 26th, we're going to draw a horizontal line from that low. And we're going to connect that line to the most recent low that we had here on Tuesday. And you can see that those lows match up perfectly. We did bounce off this new support level, and there's a gap above the market. Now, if you've been following the market guys long enough, you'll know that gaps fill about 80% of the time. So I think next week we will fill that gap, we'll move up to that line, and then I think what could happen is we could pull back from that line after the gap fills. So I'm going to leave that on there for next week. 80% of the gaps fill, and then 80% of the time after they fill, they reverse. So I'm going with those odds. Now on the S&P 500, that's ticker symbol SPY on the spiders, you'll see that I left my lines here as well. I thought we would bounce off of this line. Again, the news of Greece having those economic challenges caused the market to drop below support. So now this support or former support is going to turn into resistance. So I'm going to do here is remove this line, and then I'm going to do this, just like that. I think that we could rally up to this former trend line, and then it'll hit its head and go down. You know, back here, I also forecasted that the volume would drop, and it did. You can see consistent volume right here, and that drop in volume shows that there's a lack of interest in the near-term trend, so we have to keep an eye on that one as well. If we look at a more broad-based index, that's the Russell 2000, ticker symbol RUT, you can see that we did, in fact, break down below support. Now, this is an important line because, remember, last week I said to put your stops below that line. If you did not put stops below that support level on any of the stocks that you were trading, then obviously you gave back profits or you lost money. The whole idea in this market report is to show you where the risk points are so that you are not taking unnecessary risk, and you're using the technical charts to be able to guide your way, so to speak, in forecasting the trend. So here's the new support level. We're taking this low right here, connecting it to that low right there, and we're going to project out. If we do not bounce off of this line next week, then we will break down and go lower. So I still think that we can move up to retest that and come back down, or we're going to break right down. So I don't see any big or major bull signals coming into the market, and you have to keep an eye on that, because if you're getting long here at the top with all this economic news that's coming out through the global economies, you could be, again, stepping into a hornet's nest and have a really tough time getting in any new positions that would make you some money. Now, the Qs, that's the NASDAQ market, aka the power shares. Once again, I left my lines in place. If you remember from last week's report, I did not make any change to this. I did think that we would go down to this line and retest that. We did exactly that. The drop in volume supported that idea that there was not many buyers coming into the market. So I'm going to redraw this line as well, and I'm going to show you, again, this isn't rocket science, of course. It's pretty easy, actually, when you're just connecting these lows. So now we have a new low. We're going to take this previous low, from back in April, connect it to this low from this week's low, and project out. There's a small gap above the market, so what I think is going to happen is we will reach that and then pull back from it, just like what we saw in the diamonds. So I'm going to leave that line like that, fill the gap, come back down, and possibly retest that support level. So keep this in mind for next week. I went through a lot of work the week before showing you how the charts were so accurate. We were 100% last week, and I clipped the snapshots of the previous charts, matched them to the current charts, and that was the evidence that I have. Each and every week I use the previous lines to build off of so you can see exactly how we're doing this. Now finally, the VIX. The VIX, of course, is a leading indicator for us, and it tells us who is in control of the market. And again, I left my lines here. See this? This is what I thought the VIX would do. I thought it would go up to this resistance line, and it did. In fact, it broke through the resistance line, pulled back, and what is this right here? That's a bullish engulfing pattern on the VIX. Now, here's what I think we can do. We could still drop a little bit to fill that gap on the VIX. The VIX does not like to leave gaps open, and because that's a bullish engulfing pattern, I think this one's going to take off. Now remember, if the VIX goes up, what does that mean for the S&P 500? Well, it's a contrarian indicator. So if the VIX goes up, S&P is going to drop. So keep an eye on that VIX. That should be one of the most important ticker symbols that you have on your watch list. That's a leading indicator. That, combined with volume, helps you become most accurate when you're forecasting your own stocks. Finally, if you go to the Market Guys website, you can click on the video tab right there at the top of the page, and it will bring you to a library of videos that talk a lot about what I've just discussed. Trading the gap, right there. Learn about that. That's only a very short video, 3 to 4 minutes long, and you'll know how the role reversal works, and you'll know double tops, and you'll know head and shoulders. There's so many things that you can learn here just from watching a few short videos. So we at the Market Guys provide world-class financial education. We hope you're taking advantage of it. This library, by the way, is free. So tell your friends about it, and we'll talk to you next week. So long.